hey, this XIV and these XVXY, they can go to zero. It's not a zero probability that that could happen. So you have to be cognizant of that. We were talking about that back in December on the show, and unfortunately, it happened.
Hello, you beautiful people. I hope you're having a wonderful Monday. Welcome back to the David Lincoln Show, and let's just jump right back into it. I'm here today with Mark Longo, the CEO and founder of the Options Insider Media Group from Chicago, who has recently returned from the Risk Management Conference in Florida. So welcome back to Chicago, I guess. Are you excited to be back there? Is it freezing there?
It's a little cooler than it was in Fort Lauderdale and Boca Raton, but it's not bad. It's this time of year, 50s in Chicago is not bad at all.
Nice. Well, I got to talk with one person. I did one interview from the conference after the second day. Actually, it was right after the Winklevoss twins interview.
Yes.
And with this guy, Mark Thompson, and it sounded like a great time. I want to get down there sometime. Yeah, it sounds like you've gone to the conference several years. Is that true?
I've been going to risk management for probably about 6 years or so now, and it rotates between California and Florida. And it's definitely a unique event. It's unlike, most of the conferences I go to are typically aimed at the industry. Excuse me, in case you can't tell listeners, I have a little bit of a cold coming back from all this traveling. But I think my voice will hold up. But this conference is more aimed at the end users, the practitioners. So it could be fund managers, pension fund managers, asset allocators, financial advisors, a little bit of a different audience, which for us is always kind of refreshing. And we actually have a lot of content on our network aimed at that audience. So it's always fun for me to go to that conference. We meet a lot of listeners of our programs there, and it's always a fun time.
Yeah, was Bitcoin very dominant there now? Because I know that's a big feature of the Cboe nowadays. Did that over? Yeah.
Crypto was the theme, I would say, of both conferences. But crypto, which is funny, I joked with some people at both events that if you had proposed a Bitcoin or crypto panel at last year's event, either of these, you would have been laughed out of the room. They would have said, no, we're not a bunch of, kids lurking in the background of the internet trying to trade cryptocurrencies, and now a year later, it's front and center. Like you mentioned, the Winklevoss twins actually were keynote speakers at both conferences. So it's inescapable. The draw of crypto is there, and it is prevalent, and it's not hard to see for a lot of guys coming from the options world and others that there are some analogies to be made to the early Wild West days of options, and there certainly is a groundswell of interest there. Whether that will develop and form into a deep liquid market, the kind that you and I'm sure a lot of your audience likes to trade, that remains to be seen. But for now, there certainly is a groundswell of interest, and people are trying to figure out ways to translate it and transfer it and make it suitable for active retail, for institutional funds to use. So it's still got a ways to go yet, but it's certainly got all the mind share these days.
Yeah, so it's obviously it's a huge thing in the YouTube world too. I mean, there's people have 100,000 followers after 1 week on a YouTube channel with the Bitcoin and stuff. And I actually have two friends who invested in it and have been trying to get me into it. And I haven't totally bought into it yet. I kind of think it's sort of a phase. I mean, I believe in blockchain technology, but I think most people that are investing in Bitcoin are trying to get rich quick. It's not really about the technology. And so we'll see what happens, though. I mean, it's
kind of hard, when it goes from sub 5,000 to 20,000 in the span of 6 to 8 months. It's kind of hard for people not to get lured in by the speculative nature of that, right? So you can easily see. I lost track how many people at these conferences over the past couple of weeks told me they paid for their kids' college with crypto. I've learned over the years to take all that kind of stuff with a very large grain of salt, but still, it is kind of fascinating to see just who's been lured to these products over the last 6 months to a year.
Yeah, well, it's a whole new group of traders. I mean, people just starting out who might actually end up in our business at some point. as that is an entranceway into the trading world. I wanted to actually take you back a second. This is sort of a different thing for you. I know that you get to actually be on the other side of the mic for a change. So I want to kind of like take full advantage of that. So I just wanted to ask you about your start at the Cboe. I know that you were a Cboe market maker, as was I. And I think we were probably in the same area, although we probably walked past each other 100 times, but never met. But how did you get involved in the Cboe?
It's funny. I study engineering in college, and I planned to go all the way through with chemical engineering. And then one day, I happened upon a course in the graduate school of all things. It's called derivatives, and this was not too long after the Nick Leeson fiasco. So everyone was kind of running scared of derivatives, and it just seemed interesting to me. Look, I should probably check these things out. If everyone is terrified of these, I should maybe try to learn about them. So I went and I took that course. And that was kind of about it. Once I learned that I could, because everyone else I knew who wanted to get into finance, they wanted to get into stocks, or they wanted to be an iBank or maybe some bonds. But then I started learning through options. You could create synthetically any one of these products you wanted to trade. You want to make a bond, a future, whatever, a stock. You could do it with options, and you could do spreads and everything else. And once I started learning those rudimentaries, that was it. I was hooked. So I switched into finance. And then like a lot of people, I went down to New York after, I went to school in upstate New York. And so then I went down to Manhattan, like all my colleagues in finance. They all wanted to become iBanks or iBankers or analysts. I was the one idiot who said I wanted to be a trader, and more specifically, an options trader. And so back then, this is around 97, there wasn't a lot of options trading in New York. There was some heating oil stuff on the NYMEX. I looked at all the big banks and their various rotation programs, and the notion of spending a couple of years on one desk, then another year on this desk at a place like Goldman or Morgan didn't really appeal to me either. And then, as luck would have it, I was contacted by a market making firm who went through my college website, the Cornell website, and they recruited me. They met me in New York, and they flew me out to Chicago. And my first interview was in the SPX pit.
Wow.
On the heart of a pretty bustling day. And once I saw that and I saw the action, this is back, in the 90s when the Cboe was full to the gills and the SPX pit was hundreds of people, and open outcry was still the dominant way of execution. That was fascinating. And I also knew even then, that wasn't going to be around forever. So if I wanted to see that, that was the time. That was probably going to be my only chance. So I got lured out to Chicago. I started as a market maker, as an assistant trader. I worked on my way onto a badge. And a couple of guys from that company ended up leaving with me to start our own group. And we traded in the index for a number of years, SPX. And then around late 1999, early 2000 is when multiple listing happened in the options world. That's, of course, when used to be the Cboe was the exclusive domain of most of the names. And, the PCOS would have a few, Amex would have a few, like Intel. Then all of a sudden, the SEC said, yeah, not so much. So all of a sudden, every listing was free game to everybody. So all of a sudden, Cboe started listing names that were on the PCOS and on the Amex and vice versa. So it became a massive listing war, and people were literally getting in fights. You probably remember this, to get out into when new pits were open, like Dell or AOL or Yahoo at the time, all the big .com names. So I actually went and slept over at the exchange, which sounds crazy, but that's what people used to do. I slept over to get the first spot in Intel, and I was a market maker out there for pretty much the rest of my time on the Cboe, with a little bit of a foray into Microsoft for a while. So that was kind of that was a fascinating experience, just to see and kind of watch all that unfold. And I'm certainly glad I did it. And like I've said on our shows many times, and you probably are aware yourself, having come through it, there still is no better way to learn about options trading than having gone through that path. I kind of liken it to immersion training for a language, where you're just dumped into another country and you have to kind of sink or swim. You have to learn the language or you can't get around. And it's the same thing with doing that, being thrust onto the trading floor. You're literally learning Greek, because you're learning the Greek variables, you're learning the hand signals, everything else. And then more importantly, once you become a market maker, you're putting on positions that other people don't want. You're taking the other side of all the trades that they want to do. So by definition, almost, you're putting on bad positions. So now it's up to you. You're playing defense all day. So it becomes up to you to how to spread this off. And so risk management becomes, first and foremost of everything that you do. And that's a great way, I think, to learn to approach the product. The retail who've had the advantage for being customers all their lives, which is a great advantage. You get to choose when to initiate. They never had that experience of having shall we say, unwanted positions flung at them on a daily basis, let alone a day when the stock is down 25, 30%. And guess what everybody wants to do? They want to buy puts. So guess what you're going to do all day? You're going to sell puts when the stock is tanking or the index is tanking. When you've been through a few of those, you learn a thing or two about risk management. And so I still say today, and it's kind of a shame that like you mentioned before, that's kind of gone the way of the dodo now. There aren't really a lot of, certainly the trading floors are a pale shadow of what they used to be. And there aren't many firms out there that will do what they did, 20 odd years ago, which is to bring someone out, recruit them, train them up, spend the money to have them take the test to get on a badge, back them effectively with capital. The number of firms willing to do that these days is much smaller. So unfortunately, that universe of people who are able to learn from that path, it's not really a viable path anymore. So you mentioned crypto. Maybe crypto will be the new foray into that. It's interesting. It certainly has a lot of analogies, like I said before. But yeah, it has been interesting. And then slowly after that, I got lured to the dark side of content, which I've been doing for a while now. So that's a story in and of itself.
Well, like you said, that was an amazing place to just walk into, and had that amazing energy and electricity to it. And although we haven't met before, we're part of that fraternity of people that were at the Cboe at that special time. And I try to explain to people a lot that that's a great point that you make, that we were basically stuck being the counterparty to trades of wired people, some of the smartest traders in the world that were wired with insider information, quote unquote. Maybe I shouldn't say that, but were wired, and we had to take the other side of their trades. And when you have like the worst possible positions on and have to scramble to try to make something out of it, that teaches you how to trade options, no doubt. And that was invaluable for all of us down there. It sounds like you had the insight, you were saying from the very beginning, that this may not last forever, because I didn't have that insight. And
yeah, I came out to Chicago, and I kind of gave myself at the time, I said I gave myself a horizon of 5 years, come out to Chicago, try out this absolutely crazy life that is on the trading floor. And it is crazy, not at all healthy. And then give it 5 years and then see what comes of it, and maybe do something else or do something related. But I always kind of knew coming out here that this was a finite thing that I probably wouldn't be able to do forever, even if I wanted to. So it was always kind of in the back of my mind to maybe appreciate it and take note of just the odd symphony of human interaction that was the trading floor. Back on the days when there would be a surprise rate cut or something like that, rating out, and then you see the roar come rippling across the floor. It's a unique thing, and a lot of that is gone now, which is interesting, and probably a tragedy in and of itself, but still interesting nonetheless. But yeah, I came out into this business with the goal that I always probably knew was going to be finite. And then once market making really started taking it on the chin, post multiple listing, that's when I started to realize, yeah, I think 5 to 7 year probably was a good timeline. Maybe I should start looking into other things. And that's kind of when I started the content business on the side, and this kind of blossomed now into this, our little burgeoning media empire here, going on 11 years.
Yeah, that's amazing. I was doing some research on you, and you started way back when with all this stuff. Now it's commonplace for people to have blogs and podcasts and this sort of thing. But when you started, it really wasn't happening in the finance world at all. When did you start?
Let's see. I was still trading, but I was kind of winding down my market making career. So I would say it was around 03, 04 when I first was approached by some publications, back east, mostly equities oriented publication. This was a couple of years after the .com bubble had burst. So they were kind of done with stocks, and they said, hey, you're an options guy. You can put a sentence or two together, which at the time I didn't realize that was a fairly rare skill set for a trader. Now I understand that. Back then I had no idea. And so they said, hey, can you help us kind of as an advisory capacity, explain what these options things are? So that's kind of led to me just not, I was still trading as a fun little side thing. I did a column for places like Traders Magazine and a few others about options trading, what it was, what the industry was. Again, just a fun lark. I never really thought much about it. And then that just took off from there. As soon as I started doing that, I started getting phone calls and emails from other publications, other outlets saying, hey, we liked what you did with XYZ publication. Could you do this, but for a big, let's say, cover feature for this publication, or this thing or that thing? And all of a sudden, these calls started growing with frequency to the point where I said, wow, market making kind of trending down, the cost for transaction. We were getting taxed upwards of 40 cents a contract. Penny pricing was on the horizon, so that was squeezing spreads even further. So you had a scenario where risk was increasing and your profit, your revenue was decreasing. It's not a long-term positive trend. So I was already eyeing other things, and this kind of fell in my lap. I started pursuing it just as a side thing. And then around 2006, I kind of thought, well, I should see what I could do to take this to the next level. And that's when we hit on the idea for what at first was the website. And we looked around at the online option space back in mid 2006 and realized a couple of things. A, it was heavily retail, and B, it was full of high pressure, sales stuff. Everyone who had content was there to upsell you to something else. They wanted you to buy their guru newsletter. They wanted you to buy their, let's say, options tracking software. They wanted you to buy their brokerage service. Content was always an upsell to something else. And I thought, why don't we try a different approach? Let's make content for everybody. So retail, but also former market makers like myself and traders and brokers and everybody else, industry people. So everybody could come to our site. And then also, we're not going to sell them anything. And so the content's going to be the content, and they can come and enjoy that free of any other obligation. And I thought that would make us stand out from, the universe that was out there that was really all about hitting you over the head with content to sell you. And so we started with that. And then I thought, well, how are we going to make money on that? So we started with the idea, which at the time was fairly revolutionary. It had been done in other industries, but in options and finance, it wasn't done a lot, certainly not in the option space. And that was to get sponsors for things. So we made the whole website sponsor driven, and no one really understood what the heck I was talking about. When I went to meet with big exchanges or brokers, they would all say, "What are you selling?" And I would say nothing, and they didn't understand it. And then on top of that, we had this crazy idea at the time because I've always been a bit of a technophile, and so I listened to the podcasts back then. And this was pre-iPhone. This is pre-really modern iTunes. So podcasts were hard to get. You had to have an RSS reader. You had to be pretty tech savvy to get them. So as a result, they were all aimed at the tech crowd. They were all, tech stuff and tech oriented. There was no one doing finance, let alone options. So I had the crazy idea. I said, hey, I know if I make an options website, options content destination, I know I can get that guy who's 60 years old with $500,000 in the bank. I know I can get that guy. How do I get anybody else? Maybe somebody a little bit younger. Let's try to experiment with some new mediums, new platforms. So we created what was at the time, it might have been the first finance. I don't really know, but definitely the first options podcast. And that started when we launched in January of 2007. And now it's grown up into kind of what we're known for. We're known for the Options Insider Radio Network. That's our thing. We have a dozen different programs we do. With a lot of the big players in the space. We'll talk volatility with Cboe. We'll do futures options with CME. We'll do things for active retail with a lot of the big retail brokerage firms or financial advisors with the OCC and things like that. And that's kind of been our niche from the beginning, is to try to carve out something different and try new ways to get the content to the audience. That's how our handle is at Options on Twitter. We're just looking for new platforms and ways to get things. And so we thought, hey, let's try this Twitter thing. Maybe this will become something. And we were just lazy. And so we didn't want to type Options Insider every time. So I shortened it to Options. And lo and behold, it became a great thing. If I had known what a land grab Twitter would become, I would have grabbed everything. I would have grabbed, Cboe. I would have grabbed VIX. I would have grabbed Schwab. I would have grabbed all of them. But c'est la vie. But still, yeah. So it's worked out for us, this kind of podcast train. And it's nice now. When I first showed up at, exchanges or brokerage firms or vendors in the early days, and would say to them, hey, do you want to sponsor a website or this or that? And then I would say a podcast. They'll look at me like I was speaking a different language. They had no idea what I was saying. So I said, okay, you understand radio. And they would all understand radio. So that's why we started calling it the Options Insider Radio Network, just to make our lives easier when we were presenting it to new sponsors and new contributors. They knew what that was. And the name kind of stuck. So now here we are. Yeah, January was 11 years. So I guess we're doing something right, because in the challenging world of content and media, we're still around over a decade later.
Wow, that's amazing. So was it just you initially, or did you have partners right away?
It was kind of just an experiment. So it was really just me. I had a couple, helpers, in terms of some freelance staffers, but it wasn't really till I'd say in the early days, I would do all the editing of the podcast and all that stuff. And then after, I would say about, well, I don't know, after 6 months to a year, it was evident that we needed, more. The content demands what we initially envisioned, a couple of articles a week and maybe a show once a month was not going to be adequate to the demands of the audience. We needed content every day. We needed shows more frequently. So that's when we needed to bring in, professional staff to edit, professional staff to, manage the newsletter, manage the website. I mean, all the editorial there. And so we started building up the staff that way. And also, we've been building from the beginning, a great network of contributors that come from the industry. That's why we call it the Options Insider. I obviously have a background in the space, but so do a lot of our writers and contributors and our hosts on our network. So we're able to bring that kind of perspective that if I had just gone out and hired a bunch of, Cub writers and said, hey, you write about options now, it wouldn't have been the same thing. So we were trying to always build it with that kind of insight in mind from the beginning. And we were fortunate that, we, from the beginning, we had sponsors and we were fairly revenue positive from the very early days. And so that was nice. I didn't have to go out and raise a bunch of capital to do this or anything along those lines. So that afforded us the ability to be able to scale up and be able to hire, more staff, more production personnel, and all the other fun stuff that we have. I still try to keep the headcount manageable. It flares up there every now and then, but try to keep things manageable because at the end of the day, it is an online entity, so we could produce it and stream it and send it out from anywhere, which is kind of nice.
Yeah,
so we've taken advantage of that to have a great distributed team. A lot of them in Chicago, but also all around the country and the planet. So it's been fun to watch that evolve over time.
So how many are you currently around? Like 10 people, 20 people, 1,000 people? I'm not sure.
Our staff, we have about a dozen around that level who work for us, and then we have, when you get beyond that into like, the contributors and people who, work for us in various capacities from content and hosting, then you get into the, many, many dozens more, if not hundreds. But full-time staff who work with us, probably around a dozen, who do all different things from, the sales to the website editorial to the production on the audio and all the other fun stuff. Someone's got to make me sound good, right?
Well, I just want to put in a word for your staffer, Jean, who I was interacting with before the fabulous job. I mean, the most professional person I've dealt with when dealing with interviewing people. I mean, unbelievable person.
She knows her job. She's done a lot of booking over the years, so she's everyone loves her.
Yeah,
a little glimpse behind the scenes.
Well, I found you through Andrew, and I would definitely recommend to any of my listeners, if you haven't checked out the network, you'll just love it. If you're into options, that you have all the insiders from the industry on, and it's really really cool. I worked with Andrew for Group 1 for many years, and I
won't hold that against you at all.
the rock lobster, as you call him.
I'll probably be talking to him in about an hour and a half. We'll probably be beaming in from Maine to do our daily our twice a week show together.
Well, I mean, he and my personalities could not be more different. I mean, we're completely different, but we've managed to remain friends throughout the years. And I kind of got out of trading for a while, but I was online looking at some options thing, and his name popped up, and he was a writer for something, and then I found him again. So it was definitely a cool thing for me. What's this March Madness thing I see all over the place with your stuff?
Oh, we started a few years ago. We thought everyone loves March Madness. How can we tie it into the option space? And so we came up with the idea of what we call broker madness, which is everyone either loves their broker or hates their broker, maybe a little bit of both. So we thought we would pit them all against each other in combat to the death. So you could vote for your broker, you could vote against the one you don't like. We set up brackets just like the tournament. We have seeds, and every day for the length of the tournament, we have battles going on with two brokers facing off. It's been kind of interesting to maintain that over the last few years, as you might imagine, because the ranks of the options brokers has changed quite a bit in the last couple of years, with every firm seemingly buying every other firm up. So there's not a lot of independent players left, but then there are still some new players coming into the space. We hear Fidelity's trying to get in more into the space. Robinhood's going to start trying to launch options soon. So there still are some new players coming in. So it's added some new blood, and the audience tends to love it. They really like to vote against, or maybe for, maybe a little bit of both. We encourage the Chicago method of voting, which is vote early, vote often. And you can vote on multiple platforms via Facebook, via email, via Twitter, via carrier pigeon if you're so inclined. You can get into the studio in time. We take a lot of different votes, and then we end up at the end of it, we have 16 firms enter, and one will be crowned the champion of our Broker Madness tournament. We've been doing this. I think this is our third or fourth year, so it's been really fun. It's just something to break up the monotony and take some of the fun of March Madness and apply it to the option space. People have asked us other things. Should we do an exchange one or other? That's not really as sexy. A and B. Most of the exchanges, there's like really three big exchange groups. So there's not really pitting one arm of the NASDAQ empire against the other is not as fun. So we're toying with other ways to expand it, but it seems like it's fun. Yeah, you guys should, if you haven't already, go follow us on Twitter is the easiest way to get it. You can also follow us on Facebook or on the website. You can vote anywhere, really, as long as you can get it registered into us. And the more you vote, the more you're entered to win fabulous prizes. So make sure you get in there and play and vote, because A, it's fun. B, you get to reward or punish the brokers you like or don't like. And C, you can win all sorts of fun prizes. So it's a win all around.
Nice. I know that, Mark, that you're known not only for the Options Insider, but you're also known for the Options Alliance. And like you talked about before, you recognized early on that the pit trading was going to be sort of going bye-bye, and it's been a rough transition for a lot of people. I know it was a rough transition for me, and you've definitely eased the fall for a lot of people. And what's the status of the Options Alliance right now?
It's funny. We were doing a lot of events there for a while in the last 6 to 8 months. We kind of slowed down just because I've been busy on the main job, which is Options Insider, and then there's been a lot of things going on. But we're looking to ramp that back up again. And you're right, it was a fast. In fact, I'm hearing from a lot of guys who are in the group and guys that I see anecdotally that a lot of them have kind of embraced crypto as perhaps a new, I wouldn't call it market making, but a new kind of applying some of those skill sets into a new area. So we are looking to ramp up. We might actually have a couple of events coming up that we could announce that will have maybe a little bit to do with the interweaving of crypto and options world and market making, and maybe how you can apply some of those skill sets to that still burgeoning field. I know a lot of guys out there who are trying their hands at mining, who are saying it's analogous to market making, that you can determine the supply of what you're producing, and then it allows you to hedge in different ways. So it is kind of interesting to see how guys are taking that skill set and applying it to a completely new product area. So it's something fascinating. That's something, quite frankly, a lot of guys in the space have been looking for a long time, is a new product to sink their teeth into, a new area that they could apply. I mean, because at the end of the day, they all have that kind of high level risk management skill set that I was talking about earlier. That's a very specific skill set. And it's a shame to have that, go to waste or to leave, in this case, Chicago or other areas. So that was kind of where that group came about. We saw it was kind of post MF Global and all those kind of meltdowns, and the industry was really kind of doing a bad job at A, representing itself, and B, kind of giving these guys a place to turn. They have this great, a lot of people like myself came to Chicago for that reason from all over the globe. And now to have those guys just turn around and leave, it didn't seem like it made a lot of sense for the city or anything else like that. And so we decided to create this group and try to foster new ways. We used to call a lot of the guys doing the software the startups. They were just vendors. This is before there was a term like fintech. Now everyone's fintech is the hot thing. So we've had conferences and events around that, venture capital investing in the options startup space and things like that. So it's been my little way to give back to the community and just kind of help guys. I found my next step. It was a kind of fairly unique one, kind of hard to replicate for everyone else out there. So everyone's got to find what their next step is. And if we could help them a little bit, I'm happy to do that.
Well, that's awesome. I went away from the business for a couple of years, and I came back, and it was amazing. I just assumed that everybody had kept all their money and still had it all and was doing great, but it didn't always turn out that way. And some people were sort of down and out, and it was rough because there was a small period of time when it seemed like everything was gangbusters, and it was a little wrinkle in time for the Cboe that was an amazing little time that I remember fondly. But the thing is that for a trader, there's always stuff to trade, and for me, the transition was to go into retail from being a market maker, which is a little bit different thing. But products like yours. Your radio shows have helped me a lot to do that. So, you really do a great thing for a lot of people. I know there's probably like a generation of traders who's learned from your shows, and that must feel really awesome.
That's scary to think of, but I appreciate that nonetheless. Yeah, you're probably right. And seeing how much the space has really evolved just over the last decade, you're right. There probably are a lot of people whose really only contact with this world and this space is through maybe our content and content of other places like that, so it is kind of fascinating to think that there is probably a generation out there that has grown up with this being their kind of gateway or entry point into the option space. A little bit easier barrier to entry than having to go down to the floor and fight your way into a pit and all the other fun stuff.
So Mark said you were DVL. Is that it? Your badge was DVL?
Yes, my badge was
Or I'm sorry, Andrew, not Mark.
my badge was DVL. I still have this thing lurking around. I used to hold up in all the
Oh,
crowds.
nice.
Back when I
I,
was, and SPX was a really big crowd, so you had to hold it up so people, the broker across the way, could see you over 100 people. But yeah, they tried to give me my initials. And when you first break, you come out of college and you're first trying to break into a crowd with hundreds of angry guys who don't want you there. You're taking their money. I thought the best thing to do would be noticed a little more. So I thought, what's a fun acronym? And I thought, what about devil? And they let me have it. So I took it and I ran with
nice.
it. And it was fun. And it worked out. People remembered the acronym, even if they didn't know me. So it worked out well. So when brokers are coming in, that, hey, DVL, you want on this, that kind of thing. So it helped from that perspective.
Well, that's
And I
yeah,
guess
that's
that
what
was
you
an
need.
early lesson maybe in setting out the brand to kind of help, establish what you're trying to do.
So where do you see your brand going now? Will you get more into video? Will you do a TV show or something like that? Or?
We get asked that a lot. Um, it seems like things pivoted to video a lot, like maybe 3 or 4 years ago, and then a lot of people have really pivoted back. Podcasts are bigger than they've ever been, and so for us, we like having that ability for our audience. I mean, we do live stream it, so you can get it live if you want. But like I mentioned to you before we started recording, we don't beam out from our studio that often. This is a rare glimpse into the sanctum here of Options Insider. I'll pan over one of these days so you can see the whole setup over here. But yeah, we've toyed with it. We have a little video set up over here. We're doing a little video later this week, so we do play with video every now and then. But it's still, the audio is still our bread and butter, because a lot of our audience, they're commuting to work. They're on the train or they're driving, where they're not really going to watch a video. But listening is great. And also, the secret sauce of audio is that you have people's attention. Video, if you even look at the YouTube numbers, most of the YouTube views are really listens. People are having it on while they're doing something else. And so if audio is kind of the main driver, then we want that to kind of be front and center for us. And our contributors love it, and our sponsors love it, because they get to spend an hour or so uninterrupted in the ears of their target audience. So for them, it's kind of hard for them to find that anywhere else, which is kind of why I think our network has survived amidst all of the tumult of the media space these days. So yeah, we keep getting asked that question. And that said, if a big someone comes to us with a great idea for something unique to do, because just toying around with your video here, it's not an inexpensive prospect to do a lot of video, particularly if you're gonna have a lot of guests. Like what we do, we were always beaming in, like in a couple hours, gonna be doing a show probably with Andrew out of Maine and some other guys from Chicago and myself here in the studio. So we would need 3 different setups, one for each of us. We have to have a switcher to set that manually to do some switching there. And then I'd be reliant on Andrew to be able to manage his own webcam, which may be a dicey prospect. So I've toyed with that idea. I think if we do that, it'll probably be smaller clips here. And that's the other thing. We like to do long form. We like to go for an hour on most of our shows. That's hard to do on video. Video, you got to do sub 5 minutes usually.
Yeah.
And so we've yet to find the format and the thing that makes sense for us. And we've yet to have a big partner really approach us and say, hey, well, we don't want the podcast, we want video. If that would happen, we'd be entertain it. But just switching to a medium that costs me more to produce, that isn't, I don't think, as engaging to keep the same, sponsors and budget, doesn't make a lot of sense to me right now. We're always open to the idea and finding something unique and different. But I don't want a camera on me, 24/7. It's never been the goal of Options. It's never been Mark Longo's Options Insider, and I've never been the brand. The whole goal has always been to have the brand, stand on its own. I'm on a lot of the shows kind of by default. I kind of have to be, but a lot of our new shows we launched don't have me involved in any capacity. So the goal has always been to have this little guy stand on his own. And so if we can find a way to make video work within that framework, I'm happy to entertain the idea. We haven't seen the right secret sauce yet, but maybe that will come.
Well, I can attest to a lot of the problems with the video that you just mentioned. It's definitely a different thing completely, and keeping people's attention on YouTube can be difficult at times. I'm small enough of a YouTuber that I'm kind of just not thinking about that stuff right now, and I like the long form interviews just because that's what interests me, so I'm just doing it that way for now. I wanted to ask you one thing that I found with content creation that I can kind of consider you. I mean, you're way more experienced than I am, so I'm hoping to learn a little bit. When I listen to your shows, I learn something each time. But I wanted to ask you, how do you handle political issues? Do you just kind of dodge away from politics, or do you take a stance, or do you?
I try to avoid that for the most part on the shows, just because I think our audience comes to us to maybe get away from that. They get deluged by that everywhere else and every other news cycle. So if they were to come to my network and find that as well, it may be off-putting to a lot of them. And then B, you kind of know by definition whenever you get into any sort of political content, you're going to outrage half of your audience. It's just the way the math works out. So some people like that. Look at all the political commentators who've made a lot of money over the years, outraging people to great effect. We've always wanted to keep people engaged in the content and not have some sort of, they have some other agenda or anything else like that. So we try to stay out of the fray whenever possible. It's not always possible. Andrew loves to drag his diehard libertarian trends onto the show every now and then. But aside from that, I think we've done a pretty good job of staying out of the fray. I mean, that's not for everyone. Some other people might want to let their political flag fly on whatever content that is. As long as you're okay with knowing that that's who's going to be in your audience, people who mostly agree with you, then that's fine. That's what you want. And then if we try to take the more even keel where the content is first and foremost. We're here to talk about options. Not about the politics of it. And luckily, options are kind of insulated from that. We'll talk about a lot of exchange, wheeling and dealing and maneuvering because that will impact the option space at the end of the day. But very rarely are we sitting back and talking about broad governmental issues? Maybe on our advisor show a little bit, where things like the SEC and the Dodd-Frank and things like the fiduciary rule coming out of the Department of Labor, those things are a little bit more prominent. We'll talk about that there. But I think, and you know this from being around the space for a while, the default perspective most people seem to have when they've been around options or the markets for a while, actually trading in them, once they see how the sausage is made. I don't care if you're the most diehard liberal or the most far right Republican. At the end of the day, everyone seems to take a default of hands off. Less regulation is better because they've seen all the ham-fisted ways that regulation has been done. So they know at the end of the day, regulation is probably going to screw up more than it fixes. So even people who are the most, big government, left-leaning people on the planet, if they've been around the markets for a while, they tend to lean that way as well. So options have this rare ability, it seems like, to unite people, at least on that one political front, which is kind of keep your hands off our markets.
That's a good point. Yeah, because politicians don't seem to understand it. I mean, they certainly got like the pattern day trading rule wrong. And I wanted to ask you. I come from the VIX space, and I've followed some of your a lot of your coverage lately. I just wanted to ask you, what's your impression of this whole XIV and February 5th, that period from 3 to 4 in the day?
I don't know what you're referring to.
XIV, yeah.
It's been I think to call that controversial. That's maybe skirting into some political lines there. Certainly, it seems like that's caused a bit of a almost religious schism in the space between people who think those products are never should have been approved and they're hugely detrimental to the space. Other people thinking that they performed as advertised, even if those advertisements could have been a little bit clearer. I kind of fall in the middle a little bit. I think they are Franken products. I always called them that from the beginning. They were stitched together from pieces of other things in an attempt to replicate something else. As long as you knew that and understood that, and as long as you knew that, you read, we used to warn on our Volatility View show all the time, hey, this XIV and these XVXY, they can go to zero. It's not a zero probability that could happen. So you have to be cognizant of that. We were talking about that back in December on the show. And unfortunately, it happened. I definitely kind of fall on the lines of, they did as they were advertised, but I think there could have been a lot more in the way of advertising done to that effect in terms of making the issuers, put it out there more, certainly on the brokers. I think a lot of this falls on the brokers, where, brokers have a hard job because they get paid only if you trade. So it's hard for them to put roadblocks in front of people to make it harder for them to trade. And certainly people wanted to trade XIV and SVXY. Those are popular products. So it didn't behoove them to put a landing page saying, hey, here's all the warnings, click here to understand. Some people think that they should make people register. Like you have the level 3 options clearance to write options. Maybe you need some sort of clearance to trade a short product that holds short positions. Maybe there's some merit to that too. But I think the products, they did what they were disclaimed to do, at least in the case of XIV. SVXY was a little bit less clear in it's what they disclaimed. But I think far too many people were trading these things that had no idea. And I think a lot of that falls on the brokers putting these things, they're taking a product like XIV or SVXY, which is an inverse volatility Franken product at the end of the day, and they're putting it on the same splash page next to products that have a proven track record like SPY and GLD, things that are robust and have weathered many market conditions. And people see this and they think they're all ETFs, one, which we know is wrong. And then B, they think they're all the same. They're all the same level of, they're all safe products. And so if I trade SPY, why wouldn't I trade XIB? They're all ETFs to people. They don't differentiate between ETNs and ETPs. So there's a huge education gap that I think needs to be overcome. And I think quite frankly, the way the SVXY, I think, shall we call it, the delevering was handled was just awful. You can't come out in the after hours after people have been trading options fervently, even that day. You wouldn't believe how many people were hitting up our network ever since February 5th, right until SVXY got neutered, saying to us and to me, this product is great. It's the survivor. It's been proven strong. It's been proven robust. This thing, everyone should have it in their portfolios. They were writing to me, and I was arguing with them, saying, we've seen that there are still some other shoes waiting to drop in this space. So I said it many times. I wouldn't touch SVXY post February 5th with a 10-foot pole. Certainly not the underlying, maybe some silly flyers and like a vertical on the calls for no money, for cheap dollars. But that's really about it. And that's just more of like an exercise to kind of show people what to do. But yeah, we all knew there were other shoes waiting to drop. And unfortunately, that happened with SVXY completely got neutered. And I'm surprised there haven't been any lawsuits, quite frankly, announced about this. Because just given the amount of vitriol I've seen from our audience, I'm sure you've seen it from your users as well. People are mad about this. And you can't just overnight, without any warning, effectively change the entire investment objective of a fund, wipe out all the options in the process. I'm still waiting for the announcements of the lawsuits to come. I'm sure there have to be some big funds out there that are, shall we say, not happy with this.
Yeah, I agree with you as far as the changing of the leverage for UVXY and SVXY. They could have split it a different way, like changed the symbol and left the options, or there could have been a better way for them to do it. They sort of rushed through it. But I think you have a very, I think your view is very down the middle, which makes a lot of sense to me. Way back when, if you wanted to sell volatility, you would kind of have to work hard enough to get your understanding of options and skill up high enough to the level where you understood, okay, well, if I want to sell volatility, I need to identify maybe an equity that has high vol or that can be like a proxy for the market or something like that, and sell strangles in it or sell straddles in something. You kind of had to build up your options knowledge to get to that point. With these prepackaged things, like, people could just jump in and effectively sell strangles or straddles in the SPX or in equities or whichever proxy you want to use, and without understanding what they were doing. And it was a scary thing. And we tried to. I'm sure you as well tried to warn people, but I don't have that big of a platform, and people. You're right. People didn't know what it was, and whose fault is up to debate, but people just didn't know what it was. And it was hard for me, with a lot of viewers losing money, to watch that happen. I mean, I can't imagine if you had like sold like a 10 lot of the 75 puts in SVXY or something that day, when it and all of a sudden they're $50 against you. It must have been awful for some people.
Yeah, I heard horror stories even at the risk management conference a couple of weeks ago of large funds who probably should have known better. Who were selling, who were buying SVXY, or I think it was XIV, maybe one of the two, pretty much all the way down from the after hours, thinking, which is doubly foolish, because at that point, everyone kind of knew the jig was up and there was rebalancing to be done, and probably bad things were afoot for the inverse vol space. Apparently, they weren't buying that, because they were buying it all the way down and lost many, many tens of millions just on that ride down. So they didn't even ride it up. They just rode it down. So that's the worst of all worlds. So yeah, it's been, I've heard horror stories of people. I actually heard some stories of people who had XIV puts and closed them out like a day or two before everything. So,
that's bad.
I've heard it from both sides. Either way, they're both, I think, still in bed, kind of just trying to sleep it off and feel better. Because that'll leave a mark either way. If you close out your XIV puts a day or two before the biggest debacle in the history of that space, you'll probably be bothered about that for some time as well.
Yeah, I don't know. It was definitely a rough thing for volatility, and a huge move in the volatility world. Yeah, I want to thank you for just sharing a few moments with me. Can we get a look around in back of you with the camera real quick?
I think it's kind of fixed. I can move out of the way a little bit. This is where a lot of the magic happens in terms of the production and stuff. So
Nice.
this is the mic I use. This is where a lot of the music comes from. I don't think I can't really pan that much. You can see some of our silly tchotchkes we have in the studio here,
Cool.
which Mark and Andrew are always playing with whenever they come in.
Nice.
We have loads of these guys. I can't really pan too much the other way.
Oh, that's good. That's good.
You could see, we have some video setups over there and some desks and some other spaces for things and more shelves for storage. We're playing around with what to do with it over there. But and you can see the desks for guests over there when they come into the studio. So yeah, it's fun. We're having a good time. We're enjoying it. We're glad to see you're carving out a little space for yourself here. It's always a fun space to be in, and it's been fun to watch it evolve over the last decade plus. It seems, every time I say that, it does seem hard to believe that we've been doing this for 11 years, but I guess we have, which is kind of terrifying and both exhilarating at the same time.
I found a video of you from 2003. You're on the CME floor. It's very interesting. So when somebody consumes your radio channels, what's the average person? How do they do it? Is it over like iTunes or Stitcher or how do?
Yeah, I'd still say about half of our audience comes from iTunes. If you do anything with podcasts, you know that podcasts have grown up and thrived really in spite of Apple, not because of Apple. Apple has done very little to be a good shepherd to the platform that they created. They don't really. Until recently, they never provided any metrics. The app they bake into their iOS. They bake a podcast app that just grows progressively more broken with every iteration on the planet. I mean, I'm an Android guy and everything else, so I've switched, and there is no native. I mean, Google Play does it now, and so there's more choices now than there used to be. For a long time, it was kind of Apple or forget about it. We have our own app now. People come to our website to stream it. They'll come to partner sites like CME and others that stream our content there as well. So there's no shortage of places you can get it. Pretty much any major podcast platform. Obviously, iOS is the biggest one, but Google Play, TuneIn, Stitcher, they all have our stuff. So if you search for Options Insider or Options Insider Radio Network, you'll get all of our roughly dozen programs. Or you can just grab our app. That'll have all of it, in there as well, and you can find all that. Or I think the easiest thing to do is just go on your platform of choice and subscribe to our network feed. That has all of the shows baked into one. So you don't miss anything then. Now, the warning is that's a lot of content. That's daily news. That's, the option block twice a week, vol views every week. That's TWIFO every week. That's the advisor's option every month. All sorts of fun stuff, trading tech talk. So you're getting a lot of content coming your way. So as long as you can handle that, I think you're going to like it. So we'll definitely keep you busy with options content, if nothing else.
Well, I really appreciate you allowing me to talk with you for a few minutes. It's definitely an honor. You're the king of the space here, and I feel like I've gotten a chance to actually talk to the king. So it's very much of an honor for me to actually get to speak to you. And
you're too
thank
kind.
you so much for your words of wisdom. And I will put links for everybody down in the at the bottom. I'm sure most people of my viewers have heard of you and the network. But if you haven't, check it out. You're really going to love it. It's amazing stuff. The best people in the industry, and it's all insider stuff. So
well, I appreciate that. Your praise is too kind. And I'll make sure when this goes live, we'll share it out to everybody so they can all discover what you're doing over here because it seems pretty interesting.
Thanks very much, Mark. And thanks for coming on, even though I know you're a little under the weather after coming back from Florida.
I held up pretty well.
You did. All right. Well, thanks again. And I will stay in touch.
Great. Take care, everybody.
Take care. All right. We're off. Thanks so much for doing that, Mark. I think it came
problem.
across well. We'll edit it down a teeny bit. And yeah, I earnestly, I do love your stuff, and I do send a lot of people there. Andrew turned me on to you, and it's awesome stuff. I love your the intros to all your different shows. It sounds so cool in the morning to listen to that market stuff, and the announcer and all that stuff sounds so cool.
It is fun. Yeah, I think we've hit on a fun little mix. And there's always room to change it. With people, you're talking about crypto. Maybe we'll add some crypto stuff because that seems to be the hot thing everyone's into these days. But we are always trying to find new ways to expand it. Maybe ETF options more and things like that. Because the main options space these days in terms of exchanges and brokers and vendors, we kind of have it all carved up. We hit all that, so we need to kind of expand a little bit and go outside our core products. That's kind of what we're doing now. You'll discover that as you keep growing and adding content, who's available out there, in terms of supporting your stuff and being part of it. But yeah, if you have any questions, I know this is this is a tough road to hoe here. So if you have questions in terms of, you know, what you're doing or any, because there aren't, it's not a, it's a small community of people out there who actually create options content on a regular basis. So
It
yeah, if you
is.
have questions about stuff, feel free to hit me up.
Thank you. That's very kind of you, Mark. Yeah, definitely. I'll stay in touch with you, and I will send you a link once I get this all together. And yeah, thanks again. If you ever need anything from me, I'm available for you in whatever capacity you need. And
Perfect.
say hi to Andrew.
I'll say hi to Andrew in about an hour. I'll tell him I was on with you. He'll find that hilarious.
Awesome.
Yeah. Now he's the reason I'm on. He kept saying great things about you. I said, okay, if you're gonna heap so much praise on him, I guess I better go check the guy out.
Well, that's very nice of him. All right. Well, nice to meet you, Mark, and stay in touch.
Great. You too. Take care.